He's Gj Papa-Markakis, Chief Investment Officer at North Asset Management. Welcome to the programme. Just what are the policies and the way you're moving forward? How did you make that 26% return when other people, not so much?
Yeah. Well, the return attribution was actually quite varied and broad-based. There were a variety of strategies, such as, we navigated the European situation quite successfully.
You took advantage of weakening commodity currencies. Give me an example of exactly what you did.
Well, what we saw was with China weakening towards the second quarter and beginning of third quarter, we thought that would spill over to commodity currencies. So the Australian dollar, the South African rand, the Brazilian real was clearly going to come under pressure. And so we took advantage of that.
And what about the debt markets? How did you make money out of those?
Well, the biggest theme is obviously last year has been the explosion in terms of debt issuance. So one thing we took advantage of was looking at each specific country, trying to figure out what's the best way to position in terms of the issuance, the calendar, and at the same time obviously taking very specific views on countries.
Is 2012 going to be just as good? Are you employing the same strategies?
To a certain extent, yes. We do particularly well in times of heightened volatility, and with what's happened after 2008, with a diminished capital of the banking sector, with the increased supply in terms of government bonds, with the whole political issues that are unfolding, that tends usually to play out in terms of increased volatility. So we hope.
Do you still think we're in a process of disintegration as far as the Eurozone is concerned? That's what you told us on December the 1st.
It definitely, unfortunately, feels that way. We have reached a point, I think, where unless we get extreme support and extreme overhaul of the European, if you like, institutional architecture that we've seen so far, it's very difficult to see. Well, we have a very high risk of a very high tail event risk.
So you think that, what, Greece is going to default?
Well, it is quite incredible that we're less than 2 months away from a very big bond maturing, and we haven't resolved this issue of the voluntary, if you like, of the haircut that's going to be imposed on the Greek bonds. So all these things suggest that an orderly default is probably the base case scenario, but the disorderly default day by day is increasing.
How would a disorderly default of Greece, say if it did happen, affect what you do? Would it be, a lot of people are saying, gosh, the ramifications of this would be terrible, it would be disastrous. Would it be terrible for you?
I think on a personal basis, of course it would be.
But I'm just talking about
in terms of the fund.
Yeah.
What we're looking for is to navigate that successfully and try to see that try to position our assets in a safe haven as much as possible.
Where then?
Well, probably you'd have to look at the U.S. bond market doing well. You'd have to look at German bonds doing even better than what they've done so far. But that is a very good question in the sense that there are very few safe havens in this world.
And what about the banking crisis? The ECB deposits, they're coming down a little, but they've been pretty high. What do you think about the way the ECB has really oiled the wheels? And do you think it's avoided a banking crisis? Or actually, do you still think we are in the midst of a real credit crunch here?
Well, I think one of the biggest issues is really the way the ECB has reacted to this crisis. And we're definitely too little too late. And the ECB is one of the institutions that has to do a lot more, both in terms of accommodating monetary policy, but also, in my view, much more in terms of bond purchases.
Gj Papa-Markakis, Chief Investment Officer at North Asset Management. I'm grateful to you. Thank you very much indeed.